On February 3rd, a train transporting chemicals crashed in the U.S. state of Ohio, sending a toxic cloud high into the sky. The disaster affected some of America's poorest people, who lost trust in the safety of their water and air. Lawmakers and regulators are calling for the freight company to clean up the site and implement better safety measures. A month later, a different kind of crash. Silicon Valley Bank collapsed, setting in motion a series of events that has shaken the confidence of some of America's wealthiest in the banking sector.
I'm sorry? We are here to protect the depositor. Whenever there's issues with the economy, we're here to stabilize as much as we can. Yeah.
The federal government has taken over SVB and another troubled financial institution called Signature Bank, both catering to the technology industry.
The only way to stop the panic once it starts is for the government to say that we're here and we're not going to ask many questions.
Mr. President, what was the banking crisis?
The politics of these moves are tricky. The Biden administration is being careful to avoid a taxpayer-funded rescue of troubled banks, a move that angered voters during the global financial crisis.
That the officers, when a bank closes like this, the officers should go to jail for a few months. Because as far as I'm concerned, and a number of the people I talked to, they basically committed a crime.
On Thursday, the government brokered a deal under which bigger banks will provide $30 billion to First Republic, a smaller bank with a high percentage of deposits over $250,000. And the U.S. government has opened up nearly $160 billion in cheap loans to calm nerves across the financial sector. That's even more than in 2008. That disastrous year still echoes today. The Fed's fight against inflation shocked a system accustomed to using cheap money to maintain liquidity. For the time being, the tech industry will have to learn to live without cheap loans too.
This is a trillion-dollar question, right? What next? And what kind of lesson will the banking industry, the venture capital private equity industry, the tech industry, the crypto industry, and the rest of us will draw from what happened, right? The one lesson that is clear from here is that, look, what systemic risk means is not necessarily predictable upfront.
Regulators and firms in the banking and transport sectors will both be taking lessons from 2023. What matters most is how long they remember them. Wilson Dizard, TRT World.
And to discuss this, we have Victoria Scholar, the head of investments at Interactive Investors, one of the UK's biggest investment platforms. She is in London. And also Alexander Yorkum, an equity research analyst at CFRA, an independent investment research provider. He joins us from New York. Thank you very much for being with us today. And Alexander, I'm going to start with you. You were in the US, right? And we've seen a week of banking bailouts. Very interesting when it comes to the banking sector, to be fair. And we've seen some serious action as well by policymakers in the US. Do you think they've managed to contain the crisis so far?
Yes, thank you for having me on. I do think they have largely contained it. I think there was concerns on Monday because the market sold off so much, but I think people have to remember that Silicon Valley Bank went down on Friday, and then people got very worried. They went to their, regional bank, maybe tried to take out some money. And we were hoping on Sunday that Silicon Valley Bank would be bought. Instead, we got the headline that they would not be bought. And we also got the headline that Signature Bank went down. So by the time the announcements came out that uninsured depositors would be made whole, I think there was so much fear already that it took a few days for that to kind of come through and people to realize that it will probably be okay.
Right, and what about, Alexander, in terms of what they've done today and 11 major banks really supporting a wealth manager? Is that enough for now?
Yeah, I think that was a really good, just a good look for the industry. People might think that maybe the larger banks like this because they're gaining share, but it's not good for anyone. If you think about 2008, maybe banks initially were gaining share, but if the banking sector goes down, it's not good for any bank. and there'll likely be more regulation for every bank that goes down. It's going to cost more for the banking industry, probably more regulation. So I do think it was a good sign that all these banks, including the top 8 banks, so showing that they do have enough deposits right now, they are sound. I think it was a very good look.
Great, at the very least for now. And Victoria, speaking about Europe, how well capitalized is the European banking sector, on the other hand, in your opinion? And is it able, in your opinion, to withstand further increases in interest rates at this point, after all that we've seen this week?
Well, actually, rising interest rates tend to benefit banks as they can earn more on their deposits. But in terms of the fallout from Credit Suisse, which is another embattled lender that's embroiled in this week of financial crisis, the banking sector actually has much stricter regulations and capital requirements than it did around the 2008 financial crisis. So I think a lot of lessons have been learned. In the ECB press conference as well, yesterday, the vice president was saying that the banks are resilient with strong capital ratios and liquidity buffers. Perhaps some of that was posturing to try to shore up confidence, but at least it is a sign that the ECB has a lot more confidence than it might have done back in 2008. So although parallels are being made, I think today's situation is quite different.
Right, and one last question for both of you. I mean, Alexander, what do you really expect the Fed to do next week at this point? How dangerous would it be for the Fed to raise interest rates again?
Yeah, I'm actually going to say I think they will probably raise 25 basis points. If you think, they're trying to handle unemployment and inflation, unemployment is near a 50-year low. Inflation is 3 times their target of 2%. So I do think they probably will raise rates. Obviously, the more rates are raised and the higher the yield curve is, the more the securities portfolios get underwater, which negatively impacted Silicon Valley Bank and sort of led to their demise. But it's worth noting that the yield curve kind of has fallen down in the last week. So in general, actually, I think the banking industry is in a little bit of a better position in terms of the losses that they have on their securities portfolios.
Right, interesting. And Victoria, if that were to happen, right, the Fed rising rates again next week, I mean, how much is this Credit Suisse, but also SVB panic related with higher interest rates for longer and the panic it generates, in your opinion?
Oh, I think that a lot of the financial turmoil that we've seen over the last week has been highly linked to rising interest rates. The market's been awash with cheap money dating back to the financial crisis largely. And with the revival of inflation post-pandemic, that forced central banks to remove that punch bowl of cheap money. It's what meant that SVB Bank had these huge losses in terms of their bond portfolio because they miscalculated the amount of interest rate rises that the Federal Reserve was carrying out last year. So I think that this sort of monetary support that's underpinned asset prices for so long is being removed, and that's creating quite a lot of turmoil. We weren't quite sure how it was going to manifest itself, but so far it appears to be in the banking sector. But there could be pockets elsewhere where we see similar issues around rising debt repayment levels.
Right. And aside from this issue, Victoria, quickly, there's now an ongoing strategy overhaul at Credit Suisse. Are you optimistic on that?
Well, it's a difficult one because, the SMB's lifeline yesterday sent its shares higher, but now we're seeing the stock under pressure again, suggesting that investors do not feel that Credit Suisse is out of the woods. This is a bank that's been embroiled in scandal after scandal over a number of years. It was linked to Greensill Capital, Archegos Capital, had links to the Bulgarian mafia, and then it reported that record annual loss, or the largest loss since the financial crisis. And now it's found material weakness in its financial statements, and the Saudis say they aren't going to step in to help. So yes, we've got this lifeline from the SMB, and yes, it is restructuring the bank. It's trying to slim down costs, reduce jobs, and cut back on the investment bank. But I think there's a long uphill battle to go in order to try to regain competitiveness against its crosstown rival UBS.